So as you're probably aware, I do a lot of Betfair trading on pre-off horse racing. And over the course of a day, a week, a month, a year, I see lots of different types of markets. However, sometimes you see markets that it seems obvious what is likely to happen next. And I saw one of these the other day, so I hit that record button and thought it would be a great thing to show you. Because very often you see lots of different types of markets, but sometimes something just leaps out at you. And this is a great example of that, but also how you would approach that and the sort of things that you would be looking for. If you're interested in learning to use Betangel, head on over to our website where you can download a free trial. If you're interested in learning how to use it, then head over to the Betangel Academy where you can do exactly that. And if you want to talk to like-minded people, then head on over to our forum. So you may have seen me mentioning in other videos, sort of sometimes there's a sort of almost a background comment that I'm looking for certain things in the market, or I have an internal scorecard and I know what a 1 out of 10 looks like and I know what a 10 out of 10 looks like. A 10 out of 10 is that trade that comes along once a month that I can absolutely blat to oblivion. And I know, and I'm pretty certain that I know exactly what's going to happen. And all of those other characteristics line up to make it a 10 out of 10. I go into it full-blooded, everything, the timing's right, everything's right, and I make a lot of money. But very often trading is all about avoiding markets that you know aren't going to trade particularly well. And I know exactly what a 1 out of 10 is, a market that I don't like, that I won't touch because I know I've got a good chance of a loss. And being able to sort of grade these opportunities gives me the opportunity to just tip these in my favor. If I trade at random, I'll get random results. I won't win or lose anything. I'll just be treading water for a long period of time. So my main objective most of the time is just not to do things at random. And one of the best ways to do that is to sort of pick and choose things that you want to trade. So I do have an internal scorecard that tells me sort of whether I like the opportunity or not, or whether certain characteristics are in place. Now, lots of people have said, can you give me a scorecard? And the short answer is no, because I'm a realist, I'm a real trader. I know what a scorecard is created by, and it's created by you. I can give you lots of clues about what to look for, things that you should be doing, things that are present within the market. But ultimately, the sort of thing that I'm going to do is going to be a little bit different from you because I have a different level of knowledge and a different tolerance to risk. And that is another part of the scorecard is, you know, do I feel comfortable doing this trade? Should score you 1 point, and are my stakes right? Should score you another? And do I feel confident? And you have those little things, those little bits that you should put into the scorecard. But fundamentally, you are looking for certain setups, things that will tell you if things are likely to work out. And on this particular trade, there are a number of characteristics that I have covered in other videos that sort of all came together to create a really good opportunity. And that was the reason that I hit the record button, because I thought this will be a good one to demonstrate, because I'm pretty sure I know what's going to happen. It's not a 10 out of 10. I'll tell you what would make it a 10 out of 10 at the end of the video. But there are a number of characteristics that make it look like a decent opportunity. So let's actually have a look at that particular trade and why I felt it was a good opportunity. So the first thing I do when I turn up to a race is I will have an appreciation of the type of race and how that could influence the trade, which I'll talk about in a second. But the first thing I do is have a look at the charts, because I'm interested in understanding what price action has been within the market. And on this particular occasion, the favourite within this market was priced at odds of 4 when the market opened, and it's been backed in heavily ever since. And we look on the ladder and we can see at the bottom of the ladder, it's near the low end of its traded range. It's approaching 2s. And at odds of 2, it would basically have a 50% chance of winning this race. It started at odds of 4, which would be a 25% chance of winning this race. And therefore, the market has sort of improved the chances of this horse winning this race by 25%. So the first question you have to ask yourself is there some justification for why this horse has increased its chances by 25%, or has the market just got a little bit ahead of itself? And I know from all of the way that I've worked in many different types of markets that very often these sort of things can have a snowball effect in either direction. And, you know, if the price comes crashing in, then people back it because the price has come crashing in, and therefore people back it because the price is crashing in. Or if the price is flying out, people don't like it, so they don't back it, and therefore the price flies out, and therefore that stops people from backing it. This is where market inefficiencies are created. This is where big opportunities occur when you're actively trading. And on this particular race, we're actually looking at a novice race. So when you're looking at novices and maidens, some of these horses may not have run before. And on this particular occasion, the favourite had run in a point-to-point race, but not under rules. So basically it hasn't run a sort of proper race, as it were. And therefore people really don't know particularly what this horse is going to do and, you know, how it will perform. So we have several factors there immediately that make this look like an opportunity. If you're looking at unraced horses, whether they're in novice or maiden races, that's always interesting because the market does build up a lot of momentum and it can get ahead of itself. But also, when we look at this particular race, we can see that there's been a significant move within the market already. Now, you could have traded this by backing it at 4s and waiting for it to come down to 2s, but of course we had no idea when the market opened that that was going to happen. This is just a function of the way that the market has worked. So because we've gone from a very high price to a much, much lower price, the opportunity here is to see that price sort of bounce off of there. It's moved so much already, we're sort of saying, well, that looks a little bit unrealistic to us, and maybe the market will sort of come to its senses as we get to the latter parts of this particular pre-off period on this race. So immediately we have a few points that you could score there. You could say it's either a novice or a maiden. You could say that the horse is unraced. And you could also say that the price has moved fairly significantly. A move of over 10%, I would say, is significant. A move of 5%, I would say, is not significant. But also, because it's a novice and a maiden, these are the sort of markets that tend to produce these moves. So we already have a few things there that we can score pretty highly. And that's what sort of initially got me interested in this particular trade and gave me the feeling that this was a particularly good setup. So another thing that I've talked about in other videos is timing, because there are certain periods within the market, sort of an hour out, half an hour out, 10 minutes, 5, 2 minutes, and so on. And therefore, depending upon what you want to do within the market, determines partially, it's not the whole picture, but partially down to timing. So on this particular trade, the price had already moved an awful lot. So we're sort of looking at the market and we're sort of saying, well, is that going to continue? Or do we think that something will influence what happens in those final few moments within the market? We don't have a great deal of time left on this market. However, we are entering that 2-minute period where a lot of hedging and other activity goes on. People who've backed it at a much higher price will be wanting to get out. And typically, the moment that occurs is when the price is sort of bottomed out and doesn't look like it's going to move any further. People will start beginning to hedge those positions. And this is particularly prevalent around this 2-minute period. So another factor we have here is the timing that we have within the market. That's a really interesting moment for us. This is a period where we're very likely to see a reaction within the market. But also, because of the price move that we've seen already, it's likely that people will be looking to hedge their positions. And if the price does start to move in the other direction, then that will encourage people to get out of their positions. And that will encourage the price to start heading up as well, which again will encourage other people to exit their positions. So we may not have caught it at the very, very top on the way down, but we can catch it in the other direction. So now there is another thing that goes in our favour on this particular trade, and that is that we're near the crossover point. We're at the bottom of the market, we're near a crossover point, and that's a favourable position to get a lay trade away. It doesn't mean that you should do it every time. You have other things to come into play. But typically, you would get to this particular point in the market and you would have preference for laying at this particular moment. And that is because when the price goes below 2 on the ladder, then it goes against you 1% of the time. But if it goes up, then it's going in your favour 2%. So it's 2 to 1 in your favour at the crossover point. So this is another aspect of this trade that looks particularly appealing. So most of what I do in this trade, you've probably seen before. And that is that when I feel that I've got a position within the market that I'm interested in, I'll initially put some money in there. And then we'll wait for that trade to mature. What I'm doing here is I'm not going in on the full stake initially, simply because we're coming up to that critical 2-minute period. And therefore, I don't want to commit a full stake here. I want to see some sort of evidence that we are going to see a bit of a rebound. But nonetheless, I have put an initial part of a stake in there, simply because I think that we've got a really good chance of this happening. At worst, what will happen is if it doesn't go in my favour, then necessarily I will cut out very quickly. So we established the position at the bottom end of the traded range. We've got a crossover point below us. We can see that there's an accumulation of money at this particular point within the market. and we're just going to look for evidence, and we can see that the price has started to respond at this point. So I've dropped in a little bit more money into here, and as soon as I've put that money into the market, then I'm going to start pitching orders above it, because that will decrease my chance of a loss. But also I'm going to cluster those positions around the area that I think it will likely reach. So I'm having a look at the charts here, seeing that the upward trend is intact, and when that begins to shallow out, that will be an indication for me that I need to speed up my trade. But also we're fighting time here. We've only got a couple of minutes in which to do this trade, so I'm always very conscious that I need to get my trade out before the race gets underway. So as we get closer to the start, I'll begin to accelerate the exit on the trade, and you can see that this is all sort of fairly standard stuff from here. At this point you can see it's actually broken up again, so I'm happy to actually put a couple of trades a little bit further up here. I feel a little bit more confident that it's going to go a little bit higher here, and then it's just a question of making sure that my position is closed before the race gets underway. But the key thing I wanted to get across in this video was not the actual trading process itself, because I've covered that 1,000 times before. It was really more the sort of thing that I'm looking for in this particular trade, why I was interested in this trade, the things that I felt made it more favourable, and that sort of thing really. The actual trading process itself, I think you've seen me demonstrate before, but fundamentally speaking, you know, we don't need a huge move here. And also you can see here on the Betfair chart, it doesn't look huge, but on the betangel chart you can see the real extent of the move, which is why I suggest you use those charts. But yeah, overall £213 or 80 odd pound fully hedged. So when you approach a market, it's important to have some sort of scorecard, because that can tell you what opportunity is in front of you. And if you get a 10 out of 10, you can smash it to smithereens and make loads of money and retire to your yacht in the Caribbean. However, if you score lowly, or you just really don't know what you can see within the market, then you just don't trade it. It's a great way of managing your risk within the market and also tipping everything just in your favor. And the reason that we traded this was for all of the reasons that I've laid out. And, you know, it wasn't a perfect trade. You know, what would make a perfect trade? Well, there are a number of factors here, because this particular race wasn't fantastically good volume on this race. The liquidity was okay, but it wasn't a particularly important card. It wasn't on a Saturday. It wasn't a big race. So you can see I've racked up a few more points there in terms of suitability to trade. If this was on a big race on a Saturday and it was the feature race and it had, you know, loads of attention drawn into it, then that would go up the ranking and I would hit it with a lot bigger amounts of money. But also, you know, if there was press interest in this particular runner for any reason or another, the weather had an impact. But also think about it. You know, it had come from a bigger price. It was going down to a lower price. It was at a crossover point. If that horse was hard held to post or was loose for any particular reason, everybody would be scrambling to get out of it, and then the price would go flying up. So those sort of characteristics are what would make this a 10 out of 10. As it wasn't a 10 out of 10, but I'd still score it quite highly, because it was still a fairly clear-cut opportunity. And it was something that pretty much anybody could spot. And certainly if you were active and learning to trade, or, you know, you were mildly experienced at trading, it was a good opportunity. You could actually probably survive just on these types of trades, but they don't occur that often, because you have handicaps where this sort of thing isn't likely to occur. And they make up about 50% of the card, so you're cutting out a big chunk of the card straight away there. But in theory, you could just sit and wait for these opportunities, and you would almost certainly get one a day. You'd get loads over the course of the week, and in the summer, you would get absolutely tons of them. And at certain times of the year, there would be even more. So yeah, you can see that, you know, this is pretty much where I started when I first started trading. Was I worked out how to certain setups that I liked, and I would just trade those and ignore all of the others, and all of the rest sort of came over time. I sort of gradually solved all of the market problems with different types of markets and the way that I would trade them, and that's what sort of got me to where I am now, where I had the ability to be able to trade pretty much what I see in almost all markets. But even then, there will be markets that I score so lowly that I just don't even bother to trade them. But it's a very important part of the way that you approach a trade. You're going into a market, you're looking for a certain setup, you're looking for some confidence that you sort of know what's roughly going to happen. You can't guarantee it, But using the sort of things that I've showed you in this video should give you a lot more confidence when you see this opportunity in the future.